please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV-18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Latha and with me are Anuj and Surabhi. We are going to ponder a great deal about the terrain in which Indian business is doing. I would have normally started with the global action, but since all those important sound bites were with you, let me just say that I think although we have to give a lot of credence to what's happening globally, I'll come to that in a second. It's not just that the government is showing tremendous push, positive push about resolving the bankruptcy cases, the NPA cases. It's also made sure that a new direct tax code will come. Again, showing resolve that you want to get the terrain of doing business positive. So I see the Indian macros in fine shape that will be given brownie points. But will it get brownie points today? That would be a matter of doubt, especially given what, not just the trends globally in terms of the slumber in the global markets ahead of a long weekend, crude rising, not very good for us, but those two statements, and Surabhi, I think you're also pondering over the same thing. The Fed saying that it is worried about the elevated valuations, asset prices, at a time when inflation is not rising. So, you can't raise interest rates because inflation is rising. You have tied as an inflation targeting Fed to looking at that. But asset prices are exactly the same terms that Greenspan used when he spoke about irrational exuberance, saying that asset prices are high, but I can't raise rates because I raise rates looking at goods and services inflation, not looking at asset inflation. Something which Michael Hartnett, I don't know if we can get that as well. Bank of America, Merrill Lynch, Michael Hartnett also saying that given these elevated valuations, are we looking for, at the S&P getting a knock now? But I just want to end with one point over here. After Greenspan called irrational exuberance, the market almost doubled before it hit the top resistance. So Fed's warnings could act. If it was to play like history, then actually it will signal a continuation of the rally, except maybe a minor heart attack here and there. But actually, last time around, it signaled a rally and didn't stop the rally.
Absolutely, take your point. I mean, there's no certainty saying that if there is a risk being pointed out, we start getting a correction immediately. But you mentioned Bank of America, Merrill Lynch, and I really got taken in by the one line that they gave out. Sometimes you get very beautiful words, even when people are describing markets. So what does Bank of America, Merrill Lynch feel about the US market? Icarus is flying close to the sun. Now, for those who know Greek mythology, Icarus is a character, was flying high, had wings of wax, and then the meltdown started because it was flying closer to the sun. So we've been hearing this word melt up. It's become the new sort of buzzword around global dealing rooms, including our very own. Those are some interesting points, but of course, Latha made the more important mention on crude and what the Fed has said. Let's just check the prices on oil, because once again, it's around 63. Stockpiles were down yesterday. That continues to be a niggling worry. Anuj, morning. I mean, the bigger question here, for some reason or the other, our own up move is getting stalled on a daily basis. We've had that 3 days in a row. Would that have you sort of a little concerned now, or is this just the market, buying some time before an upwards breakout?
Morning, Surabhi. Virendra Sehwag once said that he doesn't understand the meaning of the word pressure because he didn't know what that was. I didn't know what Icarus meant, till you pointed that out. I think maybe that's the advantage of studying in a government school. You don't know all the meaning of these terms. Look, I'll keep things simple here. Actually it's good that all these voices of caution are there, because that's exactly what feeds into bull market. When you start talking about the market, melt up and all, that's the time you get worried. And when you start talking about these things, you feel happy that okay, something good is happening. But for now, the Nifty is in a range 10,300 to 370, and I think the traders may wait for a bit of a breakout of this range. For now, the best trade that you have is to sell at 10,370 and buy at 10,300. Of course, not exact numbers, but near about there. For the last 2 days, that's the trade which has worked. At higher level, the market is giving you selling opportunities. At some point, of course, this trade will work. There's still an issue here for Indian market. India is underperforming. And I'm talking about the emerging market context. The MSCI emerging market and Asia ex-Japan both are up 3% this month. What has India done? It's down 0.4%, and I have no doubt that this is because of some nervousness ahead of the Gujarat polls. And in fact, between now and December, that's the only cue that you have, and you'll hear a lot about that. And it's a 5% event for the market, Surabhi. So, in case there is a favorable outcome, I think the Indian market immediately gains that back and goes back. And if the nervousness prevails, in that case, maybe another 4 to 5%, that could happen. I think the market will factor that in by the time you have 18th of December results. Till then, though, there's a bit of a floor for the market, so the mid-cap party may continue, though it did not reflect in the index yesterday, but a lot of stocks did well, and domestic money is chasing stocks, so that's something to keep an eye on. Also, the minor irritant today is the Bank Nifty's weekly options expiry. Normally on these days, the Bank Nifty does not do much, so let's see, maybe after an hour or so of initial sort of move on the Bank Nifty, you will see that also settling and not moving much in the last hour today.
Okay, so let's see if we indeed get some sort of a break either side or not today. But Latha, the other, of course, big development, and you were speaking to a whole host of experts on this last evening as well, the ordinance, which is, I mean, we'll have the official details, I think, once it's signed.
Absolutely.
But what does it really leave us with? Can promoters still participate? Willful defaulters can't. But promoters who are not proven willful defaulters, what's their fate now?
I just want to get that one line. I mean, you're actually touching the nerve of what people are worried about. The sentence that says is, we have barred, I mean, obviously it's an ordinance, so this is still source-based information. But the clause that most worries me is that willful defaulters who have been declared, and it doesn't say who have been willful defaulters, comma, people declared, people with NPAs for the past 1 year. Now, is it willful defaulters who have NPAs, or is it the ordinance bars willful defaulters and those who have been NPAs for 1 year? If it is two different categories, then it is very, very difficult. So that's the word that's most worrying experts. My sense is it will be read as barred persons are persons declared willful defaulters whose account is classified as NPA.
Yeah, so willful defaulters who have NPAs, they
will not be able to reapply and buy back their asset. Should be the logical way of reading it. But if it is read as two, because the previous part of the sentence is persons who have been declared insolvent, persons declared willful defaulters, and then you have this comma whose, so it should be, the comma should be an and whose account is declared, NPA. This is a major worry, and legal eagles will have to come to a conclusion. Yesterday we tried to ask people, everyone said that, yeah, it only means willful defaulters are barred, but we are just reading sourced information. Let's look at the actual text when the ordinance is signed and becomes available in the public domain, and what experts say. The other thing is, and if we can go back to the previous statement, the IBC also says that the committee of creditors will have to look at the quality of the viability plan. Now, it is almost telling the banks that don't go by someone who is agreeing for a low loan haircut. Go to the person who will give you a viable plan, so that you don't come back to the NCLT as a stressed asset. Now, this is a very, very clear direction. The weight of the government is being put behind someone who is more viable and not someone who is agreeing to give a short-term gain to the bankers. I think this loads the dice against current promoters who have just been declared, NPAs. This will mean, now for me it means that Tata Steel and JSW have the upper hand in the 3 or 4 steel companies that are up for sale. It definitely gives them an upper hand. And if it does, then it reduces competition in the steel sector and therefore strengthens the hands of these guys. That's only for steel. Generally speaking, we have to look at what the code says, and the weight is quite clearly against current promoters, from what we know. Now that's very important. It has a very important demonstration effect. It deters future, people who would like to give the banks the slip. Certainly. But at the moment, it clearly means that promoters could be in a soup.
Sometimes I wonder what's in a comma or a full stop. A lot. 13% of, I think, advances of India that are stressed right now. All right, on that note, let's move on and take a look at some of the calls that we're getting this morning from the experts. Herald van der Linde of HSBC remains quite constructive on Asian equities in 2018, even after strong performance in 2017. However, he adds new risks loom in 2018, and the unwinding of the QE program might increase volatility, and the current strength of Asian economies could raise the risk of rate rises. His key investment ideas for 2018 in India are actually two very interesting companies, offbeat ideas, Indian Hotels and Suzlon.
Okay. Well, it takes all kinds to make the market, doesn't it? Let's get you some money market views. Mohan Shenoy of Kotak Mahindra Bank says the US FOMC minutes sounded caution on the potential impact of a sudden reversal of asset price inflation on growth. He says activity in the currency market is expected to be muted due to Thanksgiving holiday in the US. Says rupee holds on to its gains registered post the Moody's upgrade and is expected to trade today in the range of 64.65, 64.95. So strong rupee.
Okay, right. On that note, let's quickly move on. We have Nigel joining in for the World View. Good morning, Nigel.
Morning, Surabhi. Well, it was red on the screen, really. More red than green is what we saw. Both the Dow as well as the S&P, they ended mildly in the red, but the Nasdaq was a relative outperformer in yesterday's trading session. Amazon, that was the stock that did quite well in trade yesterday. That ended with some gain. So that, in fact, was the stock that ended with a gain of close to around 1%, pulling the Nasdaq higher. Well, we're looking out for the minutes coming out of the Fed as well. Before that, financial and real estate space, both of them took a bit of a hit yesterday. They were, in fact, the worst performers in trade yesterday. And the minutes that came out of the Fed, it more or less signaled an optimism coming in about the economy. If you take a look at the jobs data and other data points that they looked at. But as you all were discussing earlier, they said that, in fact, the rise in asset prices, that's something that a bit of a worry for them. So that's all the cues that came out of the U.S. market in yesterday's trading session. But if you shift focus and if you go across to the European markets in trade yesterday, well, we had a couple of those indices that ended in the red. So you had the CAC as well as the DAX. Both of them did come in for some selling pressure. The FTSE, though, that was a relative outperformer. Though, in fact, we've got some commentary that's coming in there. Britain is now set to grow at around 1.5% in 2017. That's a tad lower than what was earlier estimated. In terms of stocks that were in focus, we had travel and leisure stocks. They were under pressure. Why? Because Thomas Cook reported a margin contraction, though the top line growth was quite good. That stock was down close to around 8.5% in trade yesterday. If you're looking for green really on the screen, then in fact you would find it in the Russian markets. Remember, crude prices, they bounced up overnight. And in fact, the Russian index was a big outperformer, ending with a gain of close to around 1%. But the Asian markets early this morning, they're more or less flattish, so they're trading mildly in the red. The Nikkei, remember, is closed for trade today, and even the US markets will be closed because of Thanksgiving, so volumes could be on the lower side. The SGX Nifty, though, is indicating a mildly positive start. Back to you all.
Okay, thank you very much for that, Nigel. Let me just get you the bond call as well, and we preserved it for the end because it ties in with crude. We had Mohan Shenoy giving you a rupee call. He says that massive fall in government security yields post the cancellation of the OMO reversed partially as concerns of higher crude oil prices, fiscal slippage and rising CPI resurfaced. The 10-year benchmark bond yield is expected to trade in a range of 695, 699 for the day. So we're again edging back to 7% terrain, which in the past has not been very good for NBFCs. So it's really crude that's the niggling worry. So let's invite David Lennox, analyst at Fat Profits, on the phone line to tell us where crude is headed. Good morning, David. Thank you very much for joining us. That's really the key question. Is 63 the new normal, 65, 63 to 65 the new normal, or does crude climb down sometime soon?
Well, certainly when you have a look at the bench price, we do believe, and we've kept quite stubbornly our year-end price for Brent at about $68. So you can see we're expecting to see a further improvement over the course of the remainder of the weeks in 2017. If you have a look at what's driving the current prices higher, especially for Brent, we have seen that there is some, I guess, let's say, problems in terms of supply for that particular type of crude, and certainly with the OPEC continuing to be compliant with their 32.5 million ceiling, that's put some supply for Brent in question. Overall, we are now also creeping up on the OPEC meeting come the 30th of November, And we've already heard from the Russians and the Saudis earlier that they were probably going to support an extension. So when you add all that together, we have seen the crude prices climb happily in now to the sort of lower $60 region US per barrel.
David, that was my question. So now these guys, OPEC, they've all agreed to what, a 1.8 million barrel cut a day up till March. Is the market pricing in a continuation of that? And if we get that, then what happens to supply and demand? Is there a real deficit, which means will we really see a big surge up in prices?
No, certainly the market's expectation is that the OPEC nation, the OPEC organisation and its allies will extend the ceiling beyond the end of March. So should they not, we'll probably see the oil price move in the other direction. However, they've been very compliant to date with maintaining that particular ceiling. So we think there will be probably little concern about the agreement and that will be reached. The timing as to how long, that really is immaterial, but we think it'll probably be 12 months. Then, if that happens, the key to look at after that is what happens with US production. And unfortunately, over the course of the last few reporting weeks, we've seen US production rising. It's now at around about 9.7 million barrels, which is about 170,000 barrels up on last year. And really, it's that particular event that's just kept the oil prices in check. Had we not seen that increase, then yes, you'd expect to see quite a strong rally in the oil price. So for the US producing, we have seen that check in the price.
So the $68 you think is a sustainable level for Brent, I mean?
Certainly, if you have a look into 2018, we believe that demand for crude will increase. And that's really going to be where we start to see the markets move from what's been a long time surplus to more of a neutral or perhaps even a deficit of supply. And we then will be looking at 2018. We'll be looking at 2018 with a much higher, or not much higher, but certainly a higher Brent price. But that price we have yet to set.
Okay. All right. We'll leave it at that, David, and touch base with you closer to 2018. This is a little discomforting for India, but we'll have to take what it gets.
Absolutely. Well, let's see. 68 is what they're predicting. India will, of course, hope it doesn't go over that. Let's move to some news beyond the market, and it's, of course, a big boost for the Indian Air Force. India has successfully test-fired the world's fastest supersonic cruise missile, the BrahMos, and we will now, this is the BrahMos from a Sukhoi 30 Mk1 fighter jet. So Asia is showing mixed trends right now, and the SGX Nifty extremely choppy. You can see just about a 17-point up move on that index. Well, as always, it's time to talk stocks. Our entire team is standing by with the CNBC TV-18 top 10 list for the morning. Good morning, guys. Anuj, let me go with you first. What's on your radar today?
So two non-index large cap stocks, Surabhi. The first is United Spirits. It's a bigger stock in a sector making comeback. I mean, we are world's largest whiskey consuming country. We know that. It's now approaching the price at which Diageo took control, and for 5 years, it's done absolutely nothing. And now really coming out of multi-year consolidation. Different beverage, but look at what Tata Global has done over the last 6 months or so. My sense is something similar is happening with United Spirits. Made a new high yesterday, and there was delivery-based buying as well. The other one is a bit volatile. That's Sun TV. Again, a stock which has rallied from a 20-day moving average and high delivery buying yesterday. So that could be an interesting stock. Non-index large caps could be the focus area today.
Okay. Those two on our radar, but Latha, let's just revisit the IBC ordinance. And in terms of stocks, which ones should we watch out for then?
We covered ground that it weakens promoters.
Yeah.
So my sense is, since the top 3 or 4 steel companies are the ones that are up for grabs, if this code, if the ordinance weakens the might of the promoters to reapply and get their assets, then my sense is that it certainly strengthens Tata Steel and JSW Steel. JSW Steel in particular, because they've openly announced, very vocal and aggressive about acquiring. It'll also reduce the number of players in the field. So my sense is it's positive, both because they will be able to buy, you know, they have less competition from the existing guys. The government is clearly saying the dice is loaded in favor of the solvent guys. So that also puts them on the front foot, and it will reduce the number of players in the field. Very positive for steel guys.
Okay, that's interesting. But today, the sector to watch out for could be insurance companies. There's an interesting report from Kotak on this proposal on tax rates and how that could impact insurance companies. And we have now 3 or 4 listed, of course. Abhishek.
Well, Anuj, according to the report, a task force has been formed by Finance Ministry to report or submit a report in the next 6 months based on direct tax from insurance players. So the tax proposal could be, according to Kotak Securities, at 25% versus 14.3% that they have currently, the insurance players. So what this can impact the insurance players is, across SDFC Life, ICICI Pru and Max Life, their embedded value and return on embedded value could decline by 7 to 9%, while the new business margin for all the 3 players could decline by 13 to 17%. Remember that SDFC Life, after listing, now commands a valuation of 4.6x, that is price to embedded value based on FY19 estimate. This is 50% higher to next peer, that is SBI Life at 3.1, while ICICI Pru trades at 2.8 price to embedded value and Max Life at 2.6. So the overall, the valuation picture could take a hit for insurance players if this comes in. Back to you.
Thank you very much. Well, actually, Abhishek is referring to the new direct tax code. Yesterday, the government announced that they are reviving efforts to bring forth the new direct tax code, and the the reformed direct tax code of the UPA government had clearly taken away the tax advantages of insurance companies. So if that is revisited, then there is a problem in terms of higher taxes. And actually, it was mentioned in the DRHP of HDFC Standard Life that if the new direct tax code comes, then the current tax rates will definitely go up. Okay, then here's a CNBC TV18 exclusive. Yesterday, Priya Seth broke the story that Godrej Consumer has effected an across-the-board cut in prices. Mangalam, how will Godrej Consumer react?
Not sure if it will react too much, Latha, because this was there for the taking. A lot of the FMCG companies had announced price cuts, so it was a matter of time before Godrej Consumer too went ahead and did the same. So yesterday, as you rightly pointed out, our colleague Priya broke the story that they have cut their prices across portfolio with regards to their hair colors, deodorants, etc. So that is important. What is actually more important is the commentary that the management made yesterday. The first thing they said won't impact the margins, but the second thing they said that this cut would spur demand and increase the sales as far as the volumes are concerned. So that's a positive. The stock was in mild green yesterday, expected to be in mild green today as well.
Okay, all right, Mangalam, thank you for that. Now let's move to something that's going to impact pretty much the entire market and individual stocks. Manisha, you're calling the shots with that the spiral up in crude prices overnight.
Well, back it up again. Yes, the crude prices are at a 2-year highs, and we have seen very strong gains in last couple of days. So while, of course, you will need to watch the crude prices, but on the other side, the aviation stocks, the OMCs, etc. There are 4 points really to watch in case of crude. One is, of course, what is giving support is the fact that the Saudi Arabia exports have declined to the lowest in 9 months for the month of September, and they are expected to cut exports for the next couple of months as well. That, of course, is part one. Second is you have seen a decline in US weekly inventories. That was supportive. You also have Trans-Canada cut supplies to US by nearly 85%. There are some issues in that pipeline, and it would take next couple of weeks for that to correct, and that has been an added premium. And then, of course, the biggest thing is the November 30th meeting, where the markets are now factoring in that you will see an extension of output cuts by the next 9 months as well. So all of those factors very, very bullish for crude prices.
Okay, thank you very much, Manisha. So that will be a red for airline companies, but green for ONGC, Anuj?
ONGC, Oil India and GAIL maybe, and these stocks have been doing well. Oil India in particular, of course, has been strong. ONGC has some bit of overhang of that Venezuela issue, so that's why that rally sort of stopped in ONGC, but Oil India has been a stronger play out of the lot if you see the chart of ONGC. That's,
But only airlines, I guess, will be impacted in the red, not HPBP.
I don't know, because these airlines have also got a bit of pricing power, and now of late the load factor have been increasing, so
They've ignored the oil rally actually
the
so
oil
far.
rally, exactly.
I don't know if that can continue.
I mean, look at Jet, look at Indigo. I think the SpiceJet has done well. So, but yeah, I mean, if it starts to go above 65 or 70,
so there'll be a resistance if I were to fly, with family. Maybe you would drop off some or not make that frequent a visit. Incremental passengers will worry about rising.
Yeah, but so far this correlation hasn't worked one-to-one. Let's see if it works from here. But Ekta has broken some news on Dishman this morning, Ekta?
Well, I've not broken some news. Tesaro is basically a pharma company which has received approval for an ovarian cancer drug. Basically, this drug is used for recurrent ovarian cancer, and they've received the European Union approval. They have already got approval in the US, and now it's the EU approval. And in the US, just to put it into context, for 6 months, they've sold $65 million of this drug. Why is Dishman in focus? Because they're supplying the API for this drug for the US, EU, as well as for the Japanese markets, and hence they should probably make around 15 to 20 million from European Union, and it's expected to have made around 30 million on an annual basis from the US.
Okay, thanks a lot for that. And there is an offer for sale of shares of Quest Corp, which Thomas Cook will do. So Thomas Cook selling its stake in Quest Corp through an offer for sale. Mangalam, is this something that's likely to be negative at all?
Not negative, Latha. Negative for Quest Corp because of the technical adjustment. They will get about the floor price at 800 rupees is a 12% discount to what Quest Corp closed yesterday. But a positive for Thomas Cook because they get 600 crore rupees from this offer for sale. Remember, this is mandated by the regulators itself. SEBI had said that promoters should have not more than 75% stake in the company. And since the IPO, the promoters' stake for Quest Corp has been coming off from 81.52% in September. Post this will fall to 75.38%. So it is mandated by the regulators. Thomas Cook, though it has said that they do not intend to go below the controlling stake, and this is just because it was a regulatory concern, and they will use the 600 crore rupees to pay some debt and shore up their cash balances for a few more acquisitions. Positive for Thomas Cook and a technical adjustment in the red for Quest Corp.
Okay. All right, Mangalam, thank you for that. Well, we've got a bunch of other stocks in news. Naveen's rounding them off. Naveen, I know you watch out for Titan very carefully, but today it's PC Jewelers on your radar, isn't it?
Yeah, totally, because Motilal Oswal Surbi has initiated a coverage on PC Jewelers with a buy rating, and the upside they expect is almost 36% from the last closing price. Two key things what Motilal believes is that the value migration has been happening, especially in the jewelry segment, towards the formal sector. So that will be aiding the overall growth for PC Jewelers. The second important point being the company's strong presence in the north as well as the wedding jewelry segment. These two catalysts will be spurring the revenue as well as the margin growth. The other important stock on my radar is Garware Wallrobe. So if you see, they came out with their Q2 numbers, margin jump whopping 350 basis points to around 21%. On the other hand, if you see, the PAT has also jumped by 6%. But remember one thing, most of this is already factored in the price. You saw the stock running up almost 65% in the last 1 year. 19 times FY 19 multiples for a commodity company looks a bit expensive, but nevertheless, strong numbers from Garware Wallrobes. Back to you.
Okay, Naveen, thank you very much for that. Let's quickly recap our morning list then. Stocks expected to gain: Tata Steel, JSW Steel, United Spirits, Sun TV, ONGC, Godrej Consumer, Dishman Pharma, Thomas Cook, PC Jeweler and Garware Wallrobes. Stocks that could see some pressure today are HDFC Life, ICICI Prudential Life Insurance, Max Life, HPCL, BPCL, Jet Airways, Interglobe Aviation, SpiceJet, as well as Quest Corp.
Okay, let's move on. As we have been discussing from the word go, the Cabinet has given the green signal for amendments to the Insolvency and Bankruptcy Code through an ordinance. We had some elite panel of lawyers, bankers and, buyers with their reactions. Listen in, we are coming back with our technical experts.
They are only identifying the people who are either committed a fraud or a willful defaulter, or who have siphoned off funds or appear to have siphoned off funds on the basis of the transaction or a forensic audit. So in case there is very clear evidence that no such thing has happened, I think existing promoters can also be eligible to do it. However, how the COC, or the Committee of Creditors, values the proposal from the various promoters has they going to give to this, because a total blanket ban on existing promoters who may have defaulted for reasons beyond their control may not be the right thing. And I think the particular ordinance is providing for genuine defaulters to also maybe come back. Let's see how it pans out.
Some clarity on these aspects will definitely help the process a lot. And as you know, last week they set up a committee for considering amendments to the Act. And I think I read somewhere that they even said that these amendments will be carried out ASAP, within a few months, knowing how fast we are moving now. So no question that all these will be helpful, and along the way I'm sure further issues may come up as well, and they will be tweaked to make sure that the process is as efficient as possible.
Three things I think which are required to be done as regards to IBC. One is who will be the resolution applicant. I think that clarification has already been issued or amendment has been done 7th November 2017. And also now this ordinance together, resolution applicant will put to rest. Then how these bids which will come, they are credible, realistic and viable if somebody has to establish. There is a committee of creditors. What is the uniform bidding criteria or evaluation criteria? I think has to be done. The third is the objective of IBC eventually through resolution instead of liquidation is to maximize the value to the creditors. If it is the objective, then I think there are certain amendments which are required to be done where the value getting eroded because of lack of amendments to the other acts like income tax,